this is a lot of fun. It's really fun to watch. I don't know how it's going to turn out, but it's fun to watch.
Hello, everyone. Welcome to another episode of The Circuit. I am Ben Beharin.
Greetings, programs. I am Jay Goldberg.
Well, Jay, my head hurts from this week. It was like announcement after announcement, after more announcement, after joint union announcement, after counter announcement.
Yeah,
Oh,
we were
oh.
messaging about this, and you said, "Oh, we're going to talk about this," and I said, "What about them? Did they announce something?"
Yeah.
And you were just like, your response was like, "Dude," because it's been a long week, and I've there's some things that happened this week that I thought happened like a month ago because they happened on Monday.
It's been a year of a week.
Yeah.
Yeah. So setting the stage contextually, just because I've been in a whole series of conversations this week relative to these announcements, and a lot of the announcements that we're going to talk about are, let's just say, CapEx heavy deals. So looks good for GPU accelerator companies. And the broader question now turning to what I think we have said consistently for the last couple of episodes, that the time has turned and the market wants to see the famous Jerry Maguire quote, "Show me the money." So I do think that there is it's weird. Like, I've been watching the market all week, despite what we're going to talk about, which is very positive infrastructure. Again, deals with the GPUs. People don't love them. Like, they love them, but they don't love them because there's a lot of concerns and risks that are holding down companies' values. So let's just start with that. That's the setting that we're going to continually find ourselves in for the foreseeable future. So I think just everybody recognizing the world sentiment has turned to, you're going to spend how much and you're going to make how much, and we need to prove that out. And commentary from said executives that we're going to talk about on deals has been like, we believe they're going to make money. They're already making money, but they are not making the kind of money we expect. So hence the title of this entire episode, which is "Show Me the Money," in your whatever Jerry Maguire voice comes to your brain when you hear that. So let's go in order. First thing that dropped this week was AMD with Meta. There's two parts of this I think are interesting. The first is Meta is in a unique position to really be compute agnostic. In fact, I would argue they could probably be the most compute agnostic of anybody, because they are the only person not using infrastructure to sell to third parties. This is primarily for their needs. And because of that, they can choose whoever they want, best TCO, whatever works best. They could even decide, like, look, we've got these workloads. These workloads are going to run best on this vendor or this custom silicon or whatever. And so they're in the position to do that. Now, they are getting shares of AMD, which I'll let you address and talk about. But the most interesting part to me was they are, to some degree, and we don't know how far they are customizing Instinct for Meta. I got clarity; it's not like fully custom, which nobody expected. It's, let's just say, optimized, and that this custom Instinct GPU infrastructure is optimized, like with AMD and Meta optimized it for their workloads. So again, right, better TCO. You do that because you're hoping you get better TCO for your workloads. So brief strokes, that's the deal. Another pin for Instinct. Everybody seems to believe this is still on the track for at least a sort of projection of a tens of billions of dollar business at some point in time for AMD. So not bad. There was a lot of ups and downs. The stock reacted favorably and then a little unfavorably. But this is AMD's second largest, because it's very much like OpenAI's deal, second largest now customer coming to them for Instinct deployments.
Yeah. So I had very mixed feelings about the AMD deal. I think what matters most is this is a clear strategic validation of AMD as uh, arguably this the this not arguably the as this is AMD's validation as the legitimate second source
Yeah.
GPU provider, right?
Yeah.
There, I don't think we've really been having that debate lately, but there was that debate not so long ago, last year. Can AMD really be a viable competitor to NVIDIA in the merchant GPU market? And it's been clear for a while. This is like the exclamation point on that sentence,
Mm.
right? And Meta is a large customer. This deal looks pretty massive in scope and size. It's a good deal for AMD in those terms. What did they have to pay to get that deal is a little bit, I think, where people had some misgivings, right? Because a big part of it is AMD is, as part of the deal, is giving 10% of
Yeah.
itself to Meta, which is a big discount, right? That's a you do the math on that. It's that's a pretty sizable 30-40% discount, uh, setting aside what the actual price of the silicon is, which we don't know. I think if, just from, normal course of business, you don't want to give up your company in order to win business. But I think in this case, it's worth it, right? AMD is getting a lot from this. Um, it is a validation for them, and so it makes sense. They're getting a lot out of this, and for something like that, it's worth giving up 10% of the company. Think about like a startup. Uh, like Qualcomm in the early days sold a big chunk of its equity to its biggest customers, to Sprint and Verizon, or whatever they were called back then, and that was how they got out the door. And that's a tried and true method of startups to scale and to win business. And AMD's not exactly a startup, but in GPU and AI world, we're all startups except for NVIDIA. Everyone else is a startup. So do what you have to win the business.
So just this has been interpreted a couple of different ways. One was, great. It continues to incentivize Meta to, run and even buy more for, AMD. I saw people try to project this deal, right? They're saying it's 6 gigawatts, which, to be honest with you, if you just look at timeline, that's a 4 to 5 year timing to deploy 6 gigawatts. So it's clearly multiple generations. So I think this spans, obviously not just MI for 55, it'll be whatever. Let's just assume they keep the number going 600, 700, etc. So it really is a long-term deployment. And I saw people say, well, the equity incentivizes Meta to, keep investing in AMD because they'll benefit from, the growth of that company as well. So that's fine. But like, what are the other, I guess, trade-offs, are there any that are made when you do something? I get what you say, right? And everybody agrees. This is what you needed to do, right? To get the business. Sure, it incentivizes them. But are there other trade-offs? Like, what goes through your head besides this is a win-win equity-wise when you do something like, in this case, right, performance-based warrants?
The textbook corporate finance example will say that this is aligning incentives, right? Facebook now, or Meta now, has an incentive to see AMD do well.
Mhm.
So they're going to, not just buy a lot of their stuff, but also proselytize them through their channels and OCP and all that. I guess their incentives are in line. We don't know all the details of how the timing works. It's probably looks a lot like the OpenAI deal that AMD signed
Yeah,
a month or two ago, um, where it's sort of milestone, every gigawatt you get X% of equity.
right.
Somebody did an analysis the other day. They actually compared the timing on these deals to Lisa's comp package, the executive comp package, and it actually all of that lines up, which is, so everybody's incentives are really aligned here. Like AMD is really betting on getting Instinct, getting MI series widely deployed. Um, I think I actually look at this slightly differently, and we'll get into Nvidia later. But the world is capacity constrained, and what Meta gets out of this beyond just a good deal on GPUs is they get capacity. They because AMD has
Right.
allocation from TSMC,
Right.
probably not that far behind Nvidia's, and Nvidia is sold out. So uh, this now moves Facebook up the rankings in how much compute they can deploy.
Yeah, no, I said the same thing early on, right? That it's not just that they are in a unique position to be compute agnostic. It's also that they're going to take compute wherever they can get it, and to some degree, that point, like how compute constrained we are, is also why you saw the OpenAI Cerebras deal, and you also see some of these startups that may very well have a chance for somebody who says, look, if I can't get enough instincts, if I can't get enough NVIDIA GPUs, if I can't even get enough space at my favorite
Yeah,
hyperscaler, like I'll do a deal with somebody who can. And there's semiconductor startups out there willing to do some of these also.
yeah.
Um,
I think that is actually as much the theme this week is like it just shows everybody's agnostic now. Will get what because you know how like that saying there's no atheists in foxholes. This is like the
yes.
opposite. There's no true believer orthodox in a capacity constraint.
Yes, there's no semiconductor lock-in and capacity constraints. Like, you just don't have that luxury.
That's right.
So yeah, like I said, I'm not opposed to this. I think it's good, but I do think it's worth just putting an exclamation point on what you said at TSMC is the more that AMD gets these rock solid deals, I think the more that they have a better chance of continuing to secure critical supply chain than if they didn't have these deals. And I think that helps for
Yeah,
roadmap, dependability, economics,
that's
and
right.
all of that matters, right?
That's a good point.
And yeah, so I think that's a great underlying theme as to how this benefits, right, the long haul for AMD's business. Which again, I think everybody. So I mean, I just want to mention, like, I do think people were asking me like, well, why didn't the stock go up as much? And I think most people have been taking Lisa at her words as to Instinct as a double digit billions of dollar business, and so this fits that in a deployment timeline. It doesn't change that number meaningfully at all. Like it's an execution point, not necessarily something that says, oh, your dollar amount that we think you can get just got bigger. It's just you're tracking to numbers you already told us.
Yeah, I think that is the critique, and we actually talked about this when AMD had an analyst day a few months ago, which is their if you sort of play it out all their math, they put out some really big numbers, double digit billions of dollars, all these things, and you're like even with that, you're still talking about like 20% market share, like pretty modest assumptions, and uh, I think this gives credibility to that because they did that. They had that they put out those numbers with the OpenAI deal announced,
Right. Right.
and but it had already faded for a couple of weeks after the announcement, and there's starting to be a lot of skepticism around OpenAI's ability because then OpenAI went out and announced deals with everybody else, and so there are a lot of questions like how real is this OpenAI deal? Can they get it funded? Are they really going to pick it? AMD, they're going to go with whoever can get them the money, kind of thing. This seems a lot more solid. We know that Meta can pay its bills. We know that Meta can raise the
Yeah.
money it needs to fund all this. And I think that's important. I actually looked at it from the flip side, from Meta's perspective. I thought this was interesting because in addition to this, the news sort of leaked that they have discontinued the current version of
Right.
their custom ASIC, and that makes sense. Like they've Meta's now done a deal with Nvidia and AMD for big sums. The custom stuff, it's not surprising that they would sort of deprioritize that, and it still confounds me because I think of all of these companies, they are the best candidate for doing a custom ASIC, and they just could not quite align. And I have some theories about why, what's going on inside Meta, why they didn't go down that path. And I think the short answer is they're trying to do so many different things internally. They have so many different things they want to achieve that Mark wants to achieve with AI, that having a general purpose compute solution like a GPU is their best path forward. It's not just for advertising. He has grand ambitions and other things too. Um, so it's interesting to me that they would go down this path, but they're clearly pretty committed and they get what they're going to need. They're going to get a lot of compute.
Yeah. Um, okay. There is a point I want to make on the custom silicon broadly, but we'll do that after NVIDIA. All right. So similarly, amongst the theme, NVIDIA had a pretty incredible quarter, uh, to say the least. I was tracking the buy side whisper with friendlies, and I was like, man, there's no way they're going to hit your buy side whisper because it was 78 ish to the guide. And they did. And I was like, holy crap. But tempered reaction.
That's a very polite way of putting it.
Yeah. I will say, and I texted you this, and again, Ben is not a trader, in analyst firms. So I had heard early on that based on the calls that were being made, they anticipated a 5% move. That's what it was showing for whoever can track the calls. I have no idea how that works, but that's how they're doing it. So RC them say it was 5% move. So it went up like 3, it declined to roughly 5. So people were basically like they had to execute on the calls, and so that's why it went down, because they missed the target. So fine. Weird world, but that to me just basically says if that's the dynamic, it's flat. It's flat because, and I was having this debate with others, similarly to what AMD did, right? NVIDIA said the same thing. They said, hey, we're going to make $500 billion from this particular timing quarter, and I think that's combined revenue of Grace Blackwell and Vera Rubin. So people are basically tracking their execution to that number. That number puts you roughly at around, depending on which quarter you've determined this from, around $350 billion in 2026, or NVIDIA's fiscal 2026, which ends in, well, yeah, January-ish. Okay, so they're tracking to that number, essentially, right? That's projecting roughly 80% growth year over year. Everybody's seeing them track to that number. This is what you're going to assume. You're going to have an $80 billion quarter. You're going to have some 90s and a couple hundreds to hit that number. Okay. Everybody kind of expected that. Like, it didn't inflect, right? At some point, I guess so that's what I'm saying. Why is it flat, right? How much got priced in? Was there multiple compression that happened? Perhaps, but despite an insane beat and guide, it didn't really do anything.
So all right. So let me give you the inside baseball a little bit. So you're right. The options market, we're pricing in a 5% move up or down into NVIDIA after the close, and I can do the math. But it's painful. So we'll save that for later. But the options market thought NVIDIA stock would either go up 5% or down 5% after the print. And what we got was down 5%. The street, if you look at sell side consensus, the sell side consensus numbers, the first call or FactSet or Thomson, whatever you get your consensus from, does not fully include all $500 billion that they guided to. And there are 76 analysts who cover NVIDIA on the street, and they all heard the same $500 billion. They don't have that in there. Some of that is deliberate, like, oh, I'm just gonna be conservative. Some of that is deliberate,
right?
Like, let's keep people, people with a buy rating are gonna have their numbers a little bit low so that NVIDIA can beat them. The street, though, this stock is so widely followed.
Yeah,
the buy side sees that, and they have their own expectations, which is how we get whispers, which are sort of group think about where we actually think the numbers can go. And like, I don't know, you can get infinitely complicated in thinking about this, but the bottom line is NVIDIA had a really good quarter and still the stock went down. And I think a lot of that has to do with the street likes to see upside, and NVIDIA keeps saying they are sold out.
Right.
And there's a lot of reports this week coming out of Taiwan that, like, all the things NVIDIA tried to do to get more capacity. There was a story somewhere that the antitrust authorities here or in Taiwan were looking at NVIDIA's practice, and because what they're basically NVIDIA has, TSMC has, 1 unit of capacity. They're going to divide that up. They're going to allocate that, and they're not going to give it all to NVIDIA as much as NVIDIA would like them to. I don't think there is a number high enough that NVIDIA could pay that TSMC would give them all of their capacity.
Well, they can, agree.
Right. And
absolutely.
TSMC just wouldn't do that. And so they're going to divide up capacity. They're going to allocate some to their other big customers, Apple, AMD,
AMD. Yep.
Broadcom,
Yep.
right? And I think that's the opportunity, and that's the big risk for NVIDIA. I think going forward is that like they're selling everything they can, and it's still not enough. They're leaving money on the table, and now we're at the point where others like AMD are starting to pick up that money that NVIDIA has to leave on the table.
So I agree with you. And whether that number was the billions that we talked about, right, north of 300, probably somewhere between 340 and 350, fine. But you're exactly right. It's not like they're all of a sudden gonna make a whole lot more GPUs. So to me, the question then comes down to, and call it Cress on the call, sort of pointed to this, that look, some deals will still happen. We actually think there's reasons that 500 billion moves up materially, but there's two things I think are interesting. One, can they increase ASP? So does this mean that they will increase the price of either Grace Blackwell or perhaps Vera Rubin? I'm probably not going to just drastically increase the price of Grace Blackwell, but let's say Vera Rubin, as those prices come in, because NVIDIA likes to price these to value. So they believe their tokenomics or the best performance per watt gives them a value statement to price these things. So does that price go up? Something we talked about last year, right? They have options. Can they ship more? Can they make prices go up? So the question is, can prices go up? What got interesting to me, though, was the memory point, because this didn't come up at all on the call. Nobody really said, hey, look, are you in a memory crunch? And I think that is because NVIDIA made some insane purchase commitments back into last year. And it's appear, and I think even Colette hinted at this, that inventory purchase commitments were up materially, and that they have secured the capacity that they need for at least 2026. So if they got favorable pricing compared to memory, then even if they don't raise ASPs a ton, they actually get some better margin with Vera Rubin in that. If we assume they secured enough memory in advance at favorable pricing, not to the insane memory prices that we've seen the last few quarters. So the upside again, right, is those two things. And then again, I'm super intrigued by networking, because you look at their networking business. I saw a couple analyst reports that basically pegged networking as the reason for the beat. But networking inflects materially as they move to these cluster-based racks, right? So scale up, which is not just within the rack, but rack to rack in close proximity. That number goes up as NVIDIA moves more meaningfully into these specific design rack clusters. That is Vera Rubin. So the networking side becomes another really interesting upside. I've seen some okay models for this, but everything's still right tied to the GPU. So the memory stuff I think was super interesting, and I do think they could squeeze more margins out of that, assuming again that they have secured enough capacity as they've said in their purchase commitments, as alluded to, and they're not going to get hit with the memory price bug that I think other people are going to get hit by.
So I look at it slightly differently. I agree with what you say. I just have it sort of framed in my mind differently. I think that I think NVIDIA had pricing negotiations with the big memory makers in the last two months. The memory makers know they have an immense amount of leverage because they get to allocate capacity. It's so short, and they basically went to NVIDIA and said, "We'll give you all the memory you want, but we're going to raise the price, and you got to prepay for a lot of it." And I don't have the number in front of me. I couldn't find it real quick, but NVIDIA absolutely talked about a massive increase in purchase commitments.
Yep.
And that's locking down capacity at TSMC and at the memory makers. Right. And so that's on the balance sheet. They talked about it.
Yep.
And it's a massive increase. And like, it goes many years out. I forget, it's like 2 or 3 years out. It's a pretty massive amount of tens of billions of dollars of purchase commitments. The other thing that I noticed that I thought was important and relates to this is their gross margin guidance. Right, yep. They reported 75% gross margins this quarter, which is like crazy. Chip company has 75% gross margins, and they guided for that to continue.
Right.
And my interpretation of that is one of their big sources of profits is that they buy memory from the memory makers and they mark it up to their full 75% gross margin corporate average, probably even higher. and they sell that onto their customers. So if you're buying an NVIDIA system, you're paying double margin. You're paying the margin that the memory makers get from NVIDIA plus the margin that NVIDIA throws on top of that. And the fact that that did not go down and that they didn't warn about any gross margin pressure later in the year because of memory, every other company in the world is warning like, oh, our margins are going to go down later this year because of memory price increases. NVIDIA didn't do that, which tells me that NVIDIA is not going to eat the margin. They're going to pass on the memory price increase to their customers,
Agreed.
right? Which is pretty phenomenal. And so they've effectively raised prices, right? Or
There's
maybe they've
another
literally raised
company.
prices.
There's another company in the world who does this really well.
Yeah.
You know
Yes.
who it is?
Yes, I do.
It's
Yes, I
Apple.
do. Yes. It's Apple.
And I say that just because there's actually some fascinating parallels between these two companies. But I agree with you entirely. In fact, and they had said last year this was not relative entirely. No, sorry, it was relative to memory. They had said they were very clear about that they passed those costs through. Your markup point, I agree with, which then suggests exactly what I said, which is that Rubin's going to probably be meaningfully more expensive
Yes.
than Grace
Yeah.
Blackwell
I think
per
that's right.
rack.
That's right. We know that they have a little bit of room to give in the TCO math of Vera Rubin versus Blackwell. Right. It's going to be massively better, just raw performance, and on a TCO basis, it's still going to be a big jump up. And they're going to the C part of total cost of ownership, the TCO, is going to be a little bit higher, but they'll still have a pretty good TCO to justify that. But I think it's pretty safe to assume that Vera Rubin prices are going to be higher, and people are going to start complaining about it soon. Right. And I'll tell you, in contrast to Apple, because Apple does a lot of same things. They prepay for immense amounts of capacity in both memory
Yep.
and TSMC.
Yep. Yep.
On their call, I think we talked about this when Apple reported 2 weeks ago. They
Right.
were very, very vague about
Yep.
the memory question. And I think I said this. At first I was like, oh, that's not a good answer. And then I realized they're being vague because they were right in the middle of negotiations and they didn't want to tip their hand. And so I think we'll get more clarity on that. It's not clear to me if Apple is going to be in the same position, if they're going to eat, if they're going to eat some of that margin, memory cost increase into their margin, or maybe it just won't matter because we're all going to buy the $2,000 full foldable
Fold.
phone, whatever it's going to be called. And
For the
it's
record, I am an Air person. I will be sticking with this thin form factor.
yes, but when you have the fold, it's two airs put
I
together.
know, Jay. I know. I'm not a fan of chunky phones anymore. Okay, so here's what I want to bring up, though, exactly to your point. So I tweeted this because I do think there's some fascinating parallels to the early iPod days when Apple bought up so much storage that people couldn't compete with them at any kind of scale. Like, I mean, it was like 2 or 3 years worth of storage capacity they built up, and everybody trying to compete in MP3 players was just screwed. And I think there's some parallels here to memory because I really do think NVIDIA has secured the vast majority of leading edge memory in these purchase commitments for their scale, which then I do think AMD has some of this too, which then makes me think, what does that mean for the custom ASIC roadmap when one, memory costs have gone up a much, that their TCO math changes for their price performance that they need to justify whether they're going to scale or stick with their custom ASIC versus merchant. And then two, what if they can't get it? Like what if their roadmap was, oh, I'm gonna have my bet on my TCO for my product that's gonna be in 18 months was on high memory bandwidth, and now I can't get any memory bandwidth. And so I wonder what this does to the competitive landscape. Google might be insulated from some of this, so I loosely say that, but this, to your meta point, I think is 100% true. And I really think this is going to have impacts on Trainium as well, long term. And I say that to say, if your argument, which Jensen's is that they will maintain the best TCO, we're going to give you the most tokens within your most wattage. When you want to monetize those tokens, I just wonder how much the memory bug hurts the custom silicon roadmaps, and to some degree adds that dynamic, which I said, which is NVIDIA's ability to procure that much leading edge memory, making it harder for other people for them to compete at scale. And I think that's a dynamic that, again, it's my thesis. It just, on paper, and when you look at the supply chain, there's dynamics of that hold up. Um, but I think that's interesting that they could use such leverage, as you said, to basically make it harder for competitors in the supply chain to secure what they need to really compete at said TCO with NVIDIA.
Okay, I like the analogy. I think it's interesting to compare Apple to Nvidia. There is a lot of similarities in the setup. I personally was never that convinced that memory was the reason that iPod won. I think
Storage.
it
Yeah.
was, sorry, memory and storage. I don't think that was some of it, but I think the real reason was the iPod product was just so much better,
You're right. You're
so
not
much
wrong.
easier to use. Which is, we can shorthand that to CUDA, which I think still exists, is as a,
Yes.
right. CUDA
Agree.
is still important, right? But to your point, about what that says for the ASIC makers, the ultimate cynical take on custom ASIC is you're going to go with a Broadcom to do your custom ASIC because they get allocation from TSMC. And I think that is a part of this. I know for a fact that was part of the sales, the value pitch that Broadcom makes, that MediaTek makes, when they're saying, "Hey, come do a custom silicon with us because we get the allocation from TSMC." Both those companies have pretty sizable allocations from TSMC. I don't know that applies to memory. MediaTek, I don't know about MediaTek and the memory makers. I don't think that Broadcom has quite the same pull with the memory makers. They
Agree.
don't they don't because they just
Agreed.
don't do
Yes.
nearly the volume. They do a lot of volume at
Absolutely.
TSMC, but they don't do nearly as much volume with the memory makers. And so, yeah,
Exactly.
it's a little bit trickier for them to get that. But it is Broadcom, and they know a thing or two
They
about
can.
getting
Sure.
stuff.
Sure.
Um, MediaTek, I think, probably has a better relationship around memory. Um, right, because they do reference designs, and so the memory makers care about what the MediaTek reference design says. If you get on the reference design for MediaTek, you get into the phones. I don't know if anybody cares about phones in at Micron or Hynix these days, but or SanDisk, but there is some of that going on. Like MediaTek still has some pull there. But I think you're right. I think it definitely there's a few headwinds coming for custom ASICs ahead.
Yeah. Agree. Anyway, I'm laying that theory out for everybody because I think it's relatively new in this dynamic of the competitive roadmap, and again, NVIDIA's ability to secure so much of this in advance. So, um, and again, to exactly your point, which I hadn't considered, if you're right and that they did pay a premium for upfront, like nobody else can do that. Others are not going to do that. And if they can afford to do that, and oh, by the way, still mark up those margins, it's really hard to compete with in the supply chain side of things.
I mean, going back to our AMD conversation earlier, AMD does have some pull with the memory makers, so you can probably
Yeah,
get some allocation.
agree.
Um, but they, as far as I know, they do not mark up memory the same amount, right?
Oh,
And so,
absolutely.
right, and
Yes.
so part of their TCO math of, if I'm Meta and I'm going to do a deal with Nvidia, or I'm going to do a deal with AMD, is it's cheaper. Like they just don't have to pay the same. They get all that HBM for less. Now, what actually Nvidia is charging in this deal with Meta versus what AMD is charging is a whole different story. But like it, I think we're getting to the point where AMD is probably meaningfully cheaper than Nvidia on a lot of metrics. And so how does Nvidia defend against that? It's starting to be a legitimate question we need to ask, right? Some of it is networking, right? You Nvidia has a lot of things that they can sell to sort of, I don't want to say bundle together, but because that's a fraught term legally, but sort of what goes in the package when you buy from Nvidia, and how you do the TCO math for Nvidia versus how you do the TCO math for AMD. There's still lots of things that Nvidia can pull to tweak that, but
Yep.
right,
Yep. Agreed.
pricing is one of them, and AMD is got to be a lot cheaper than Nvidia at this point.
Yeah, I agree. Um, okay. Do you also though, like, just to hit back on my networking point? So networking was 11 billion. People continue to be impressed with the growth of this number. I mean, I think it grows, but I again, I think it inflects materially at rack scale shipments for NVIDIA.
I I mean, NVIDIA did $11 billion in networking revenue
Yeah.
in the quarter, right? And just for comparison, Cisco did 15 billion, right? And Cisco sells like to like every kind of networking to the carriers and the campus stuff. Like, so Jensen said on the call, we're the largest networking vendor out there, and what he means is in the data center, where they're, I think, larger than Arista
Yes.
and Cisco data center combined.
Yeah, that's true.
But now we're talking about like they're getting close to Cisco overall. So I mean, it was a very impressive print for their networking stuff,
Yeah.
which is also
And
very high margin.
yeah, and I think that goes up. In fact, I genuinely appreciate at this point, like, Jensen is basically saying like they're the biggest in all the things. He's like, I think we might be the biggest Ethernet, shipper company, and then we're going to be the biggest CPU vendor because he said that at CES. So
Yeah.
it's just like, oh, and to some degree, I think, and he's not wrong in just emphasizing their scale, which is 100% true because his proposition had always been not just CUDA, so architecture compatibility, but the strength of their scale, right? So in architecture compatibility and the largest installed base, and those are things that keep their flywheel going. That's undisputed in their flywheel. So anyway, super interesting. Just staggering again numbers, and to not really move the stock, I think was really the debates point of everybody. But we
Just
touched on
just
why, and I
just to
think
be
that's true.
clear, when you say not move the stock, that's relative to expectations. The stock is still down, like
Well, that's
on
true.
an
Which
absolute basis.
That's
They had
true.
a monster print, and the stock is down 6%, which is confusing.
Yeah, but again, I think that observation, as I said, warrants just this again, this moment that we're in, that everybody would feel better if they just knew you had a path to monetize your capital again at a high rate, not a rate in which is not profitable at this point, or when will you be profitable? These are the questions, and we don't know. Like, we don't know. So
I just want to noted for the record that I'm doing my part to drive monetization forward because my Mac Mini is arriving tomorrow, and I'm deploying OpenClaw, and I upgraded my Claude plan to the Pro plan, to the Max plan next. So I'm doing my part. I don't know about the rest of you. Get on it.
oh, believe me, I tweeted this out the other day, or sorry, last week, and I think it's a good one because other CEOs like Aaron Levy and others have been like, just task your agents, let them work over the weekend. And I tweeted this earlier. I said, listen, I'll always keep your agents going, like always, actually, because it's a way to not do so is a waste of your time and theirs. So all right. So the news of the day, and we're going to weave in some other points to this, was OpenAI has closed their round with a fair amount of investors, NVIDIA being one of those. But the big news came around Amazon. This deal with Amazon reflects itself into a couple of different things. OpenAI is going to use Trainium, and I believe Trainium 2 was mentioned. I've asked for clarity on does that extend to Trainium 3, but it was NVIDIA is going to, or AMD, OpenAI is going to use Trainium. There's going to be a couple of interesting things. So Frontier, which is basically an environment for using agents, is coming as a stable state runtime to Amazon, and then they're going to build some custom models together for Amazon users. So a little bit of an edge there. Uh, in what was a very entertaining counter point that I said earlier on, Microsoft also released an announcement today with OpenAI, just saying we're still great friends and partners. Don't forget, we're still great friends and partners despite the deal. So that was the don't forget about us. We're still tied in. And what OpenAI gets with Microsoft is Azure is the exclusive for OpenAI APIs. So we make sense of that in different ways, but that's the way the chips are falling. Anyway, here again, and then with the NVIDIA announcement that NVIDIA has put money in, OpenAI also then committed to, I believe, another 3 gigawatts of compute all around NVIDIA, Grace Blackwell, and extending to Vera Rubin. And they called that out with a couple of gigawatts for training and then a couple of gigawatts for inference specifically. They spelled out how much was for inference and training. So great. OpenAI has now more money to now spend on infrastructure at a varying degree of TCO, depending on your infrastructure. But that was the hot news this morning around OpenAI, and in this case, again, infrastructure ecosystem.
$110 billion is an awful lot of money. Like, it's just a staggering raise. But setting it aside, I think what matters for us in the business of semiconductors is your point, is Amazon's inclusion in that is super interesting.
Yep.
To what we were talking about earlier, everybody's agnostic. We're gonna get $30 billion from NVIDIA to buy NVIDIA gear. We're also gonna get $50 billion from Amazon, and yeah, we're gonna use their chips as well, because you got to assume some of that 50 billion is in the form of training credits. Probably a lot of it,
I would agree.
right?
I think the part of this, though, that at least gives me a little bit of comfort is, this. So just looking at where Amazon's been projecting, right, for this year's growth, I think most people believed that AWS would be on an uptick to be north of 30% growth every quarter. And that was before this deal. Having OpenAI's models, having Frontier run in their runtimes is definitely an advantage, especially an advantage for the massive amount of enterprises that run on Amazon and did not have access to OpenAI before. So I actually think this is extremely positive in the growth rate for AWS, because my thesis for them all along had been, you don't have OpenAI, and so OpenAI is by far the leader in API usage, and really, right, and some of those calls will work through Frontier even if they're on Azure. I know that's confusing, but that is what it is. It is what it is. But the fact that they did not have any access to OpenAI, I think, was a detriment. And despite that, their cloud was starting to inflect upwards. And now they have both. They have Anthropic, who we can talk about it as well, but is on a ridiculous run rate as well, monetizing for the clouds with coding, and they have OpenAI. So they have full model choice at this point for their customers.
Yeah, I I I agree that it is important for AWS to now have OpenAI as a customer, but I would say it also, the flip side of that is we have a huge amount of AI spend now is going to OpenAI, right? Oracle, Microsoft, CoreWeave, Amazon are spending an awful lot of money to support infrastructure for OpenAI. It's a very, very narrow base. It just makes me a little bit nervous about where this is all headed, or how sustainable it is.
Agreed. But let me just point this out. So again, you're not wrong. However, the and let's just use OpenAI and Anthropic as 2 points. So both are on an uptick when it comes to revenue. And I'm just going to speak specifically to Anthropic because I wrote a note about them this week. So number one, their dollar rate increased first to $14 billion, because that was the number that Dario gave, faster than any company in history. It took Salesforce 16 years to make $14 billion, and they did it in 3. Then one of the folks at Menlo who put in, I think, around $1 billion to Anthropic said, in the 42 days since they raised that $380 billion, they have added 4.5 billion in ARR. I know how you feel about ARR, but let's just point aside. In 42 days, they've got contracts for $4.5 billion. If you keep, not that they're going to keep that run rate up, but just for context, if you keep that run rate up, that's $39 billion this year. Salesforce makes 36. So it's like, just the scale in which they are growing is incredible. Now, I get that may or may not continue, but we have not seen revenue growth rates like this. And in particular, in Anthropic's case, to the point of an enterprise company growing at this rate is unprecedented.
Yeah, I mean, this is a little beyond our scope, but certainly that was a big theme this week, and last week was, Anthropic kept coming out with, like, oh, here's a little a side project we did in 15 minutes with
Right.
Claude Code.
And now it's going to be the biggest business ever.
And like, it knocks out like 10% of software valuations, right? We keep seeing this again and again. They're like, oh, we're going to do security products, and all the security stocks sell off. I saw somebody joked that like, oh, the some Anthropic engineer accidentally tweeted out his lunch order, and so now all the fast food restaurants are falling too, right? It's just right because they just keep coming up with interesting things, and there's two. I think this speaks to two themes here. One is OpenAI, sorry, Anthropic has figured out how to use its own tools to make its own tools better. Like they they're on that sort of AI
Dog fooding
training
works.
itself.
Yep.
It's like AI training the dog food. AI training AI basically. Super powerful. Um, so full credit to them. The other thing that is I think taking place here, which is there's going to be like massive share shifts, right? And I think like there's lots of like all week long I've been hearing people debate about like, oh, what's going to happen? Is AI going to ruin the economy? Is AI going to save the economy? And I think a lot of what's going to take place is like it's going to be good for some people and bad for others. There's going to be a lot of share shift around things. I don't know where it's all going to shake out. I security seems like kind of a sticky customer business, so does everybody move to Anthropic? That seems unlikely, but maybe it does. There's lots, but there's the theme for me is it's yes, we're going to get some productivity gains, maybe a lot of productivity gains out of AI, but we will definitely get winners and losers in some pretty dramatic ways. And it's not clear to me. I don't think it's clear to anyone yet exactly how that's going to all shake out.
Oh, 100%. And if we did, we would make the right bets and we'd all have a ridiculous amount of money. So, so yeah, all right. So there's two other things. I want you to briefly talk about CoreWeave because it's related, and then because this topic is by popular demand as we close, I want to talk about the death of SaaS or the death of jobs. People were asking about the Citrini article, the doomer that freaked everybody out. I think it's just worth because I published a piece on where I think SaaS is safe and where I think people might be hosed. So we'll end on that. But let's start with sort of a brief directional on CoreWeave.
All right. So CoreWeave reported earnings, and it's hard to say like whether or not they beat expectations because the consensus numbers for that are just a mess. It's all over the place. I would say they did better on some things, not as good in others, but they talked about they got caught up. They had delayed a plant last quarter, but they got that up and running, so they're still executing well. Margins were a little bit light, I think, relative to expectations, but they were still okay. Uh, and most importantly, they added they said they've contracted a bunch of capacity, so they're going to have like close to 2 gigawatts online by the end of the year, and another signed up for next year, right? And for them, capacity, electricity translates directly into revenue and earnings. Lots of questions about the quality of their revenue. What is their operating leverage? Can they actually get profitable
Yeah,
here?
right.
I think they're I I am struggling with all these companies. The real issue is it's this boa constrictor effect where they have these massive deals with Oracle and Microsoft, which actually they got Corey got more concentrated this quarter, relying on those two. They have these big, huge deals up front, but we all know at some point those deals will end, right? Maybe the last 10 years, maybe the last 5 years, who knows? But the assumption is that at some point those deals will end. And so then how do you think about what else is in the business? And Corey is very conscious at this point. And Nebius has been talking about it for a long time. Corey has gotten very conscious about this, and they hired a chief revenue officer last quarter, and now this quarter they talked about their other sort of non-compute business. They have $100 million ARR business in storage, and I think and then they also have this license with this deal with NVIDIA where they're going to license their stack to other neoclouds and other data center providers. And look, I think Corey is technically the most capable neocloud out there. They're very, very competent and have a lot of real important skills. And so, yeah, there is this possibility that they build this sort of broader long tail business and become an AWS in their own right. That's the dream. I just think the street is having a hard time buying that. And I think so the stock is down a lot today. They're dragging the whole neocloud sector down. I don't have an answer to this. Like there's like I'm not saying one way or another, but it's just like there is a clear skepticism on the street about this.
Oh, absolutely. I have had this concern for a long time. we've talked about this. I'm just going to make a point about margins, and we can debate. And I think everybody, if you invest in CoreWeave or analyze this company, like you need to make some assumptions about where you believe they're going to get margins from. Why would they have better economics than somebody else, at least that gives them what initially I think last year they were in the 20-ish% margins, and now it's single digits. And they're like, well, we're going to try to get it to like low double digits. Okay. So what are the levers that they have to pull? And this would speak to competitive advantage, meaning where do they have better TCO or better economics that give them that margin? And I just don't think the things that they have today, whether that's some level of software optimization, hardware optimization, being pure NVIDIA, um, I don't think many of those are sustainable. And more importantly, I think they're going to be challenged drastically by competitors, and particularly competitors meaning the larger hyperscalers. Um, because if they just again are a infrastructure landlord to Amazon, Microsoft, and or Google at some point, that's not the same business as if they can actually become a sustainable provider selling to the long tail of the third party enterprises, which is what Amazon, Microsoft, and Google do. Um, so that's my concern is, are you just infrastructure for the big clouds? Again, that's fine, but you're a REIT, a GPU, you're an infrastructure REIT in my position. You're not a profitable or a neo cloud running at margins. So all of that to say, I get it. I understand where they're coming from, and I've had concerns about this for a while, despite their backlog. Nobody doubts that.
I think if you look at the whole sector of neoclouds, and there are what 200 of them, something like that, there are legitimate concerns. Like that number seems unsustainable, and a lot of them are just what you say. They're landlords, right? They're REITs. But if I put it to you this way, it's like, hey, what if I'm going to go out and rent a bunch of computers and manage them efficiently, and then rent out that capacity to third parties who want to use it? That's AWS, right? AWS does that exactly, and CoreWeave is making a case that they can do that. Focused on AI, but eventually be more than that. Like there is a strong business to be had in cloud computing, and I think CoreWeave is trying to make the case that they can be a legitimate competitor in this space. That they can be more than a landlord. Whether that's true or not, it remains to be seen. But like that's the basic argument, and you sort of think about it, like, oh yeah, cloud computing is a real business. It becomes less about sort of single technical tricks, and more about like efficiently managing infrastructure and having the capital to actually build that out. And Amazon was the first mover in that space, and they got way ahead of everybody else, and that sort of became self-reinforcing. AI is this moment where everything is shifting, and it opens the doors to another competitor. And that's what's going on here. Is Amazon and Azure are fighting to hold on to businesses they built at a moment in which the world is now open to the idea of doing something else.
Yeah.
That's the debate that we're seeing. That's the real fight we're seeing right now. I noticed that NVIDIA said hyperscalers are now less than 50% of revenue,
Right.
right? Which means they're selling an awful lot to the neoclouds. So those are the stakes, right? And I don't know. This is a lot of fun. It's really fun to watch. I don't know how it's going to turn out, but it's fun to watch.
Yeah. I don't either, but yes, agreed. Let's just say while I am an optimist, I have a harder time being optimistic about a few of these names. And I'm happy to be wrong, but we'll see. All right. Lastly, let's just sort of briefly touch on this. Like I did a deep dive on SaaS. Now, again, Ben is not a fan of having to cover enterprise software. Prior to the AI era, I would say enterprise software was extremely boring. It's starting to get more interesting once you start to think about agents. Salesforce announced this week, which we don't necessarily have to talk about, but the idea that agents are infusing enterprises and enterprise software, I think makes sense. So the Citrini came out with an article that was very, very doomer, and again, think people misinterpreted their intentions. Their intentions was let's just have a thought exercise. It spawned a whole slew of controversy. In fact, very entertainingly on Twitter, somebody used AI to create a video of Elon Musk and Sam Altman and Jeff Bezos in the year like 2035 or
Yeah.
2040 or whatever. So they're older, who had started a company that was using humans on pelotons and bicycle machines and treadmills, rowers, to basically power the AI that took their jobs. It was very entertaining.
It was good.
AI, AI
Energym.
slop, but Energem,
Yeah.
Energem, yeah, that's right, yeah. So, but the thesis was essentially that everybody loses their jobs because coding and software and agents just do everybody's job. Now, I still think for the foreseeable future, humans in the loop remains a key function of AI for a lot of reasons. Um, but I think the sauce points comes down to, at least I'll tell you where my conclusion is. So we created this thing I called the data moat scorecard, because basically, if you believe that data is your moats, then who has the strongest data moats? Because data moats become reinforcing flywheels for AI to be trained on. That could be systems of record, compliance, HR, legal, all these things that I just don't think somebody's going to vibe code their software for. Like, I also think it's unlikely that Walmart decides to vibe code their own version of Adobe, right? For example. But regardless, right, that's part of the theory that everybody can just write their own software. And there is some truth to that. Custom enterprise applications will be a thing through AI. I guarantee it. How far does it go? It is the question. But we don't know how this plays out. I think that's kind of the broad point. But I still think and this sounds weird, but I still think humans verifying and managing agents becomes a thing. You may not need as many humans doing these jobs. I think that's a fair point to reconcile. Um, but I don't think they go away entirely. I'm not sure that's a plausible scenario outcome, at least until where I hope maybe we're out of the business entirely and humanoid robotics show up and take everybody's jobs. But that's like 2060, 2070, and hopefully I'm retired.
So I will admit I did not read the entire Citrini piece, and so I read some of it. I get the gist of it. It's just life is too short. There's been a whole bunch of these like big thought pieces over the last few weeks, and I haven't read them all because I'm too busy playing with OpenClaw. um, I I also should note that Citrini also came out and said that they're short SanDisk, so just worth keeping that in mind when you read that
Yeah,
piece. They have
yeah, yeah.
a big short position in SanDisk. I will say, like I was mentioning before, my view is that there are going to be massive share shifts. I think the idea of you're right of somebody doing their own version of any common software platform doesn't make sense. But I would counter and say you gotta think bigger. Like a lot of the things that we're doing with software applications today don't need to be done this way, and I think they're going to be big changes. Like for me, the big eye opening moment when I really started using Claude a lot was I was like, oh wait a second, I've been trying to build this web app for years, and I've needed help, and I'm like, I get all caught up in frameworks and where's the back end and what's database am I going to use. You just remove all that and you just say, hey, this is what I want. You start with what you actually want, and then have Claude go do it, and it can get a lot of the way there right now, and it's clearly accelerating. And if you sort of free ourselves from the sort of traditional way of thinking about software, it does pose some pretty significant threats to a lot of the big software companies. And this is my point: is like software is not going to go away, businesses aren't going to go away, but the way that those two interact is going to change pretty radically. And I actually spoke to an MBA class at Haas Berkeley this week, and it was supposed to be about semiconductors, but we ended up just doing an hour of Q&A. And there's a lot of like here are people who are sort of young people just in transitioning
Right.
their career, trying to figure out what to do next. And I was like, don't worry, you work at Apple or you work at Samsung or you work at wherever you're doing chip design, you're doing marketing, you're not going to be out of a job right away because of software or because of AI. You're still going to have a role to play. But at the same time, like start using AI now. Get to know how to use it. Figure out ways to use it for your job, um, because that will be the competitive advantage, and that's how you, as an individual, will gain share in a what's going to be probably a pretty challenging labor market in a few years. You can stand out is because you're a year ahead of everyone else in using the latest AI tools.
Yep. Yep. Agreed. Anyway, this will remain, I think, a hot topic. Obviously, what happens in SaaS, what happens with custom software, and then what do agents look like, and how many humans does it take to to manage agents? Humans in the loop. But yeah. All right, we went longish today. There was a lot that happened this week. We appreciate everybody listening and always your comments on the Twitter sphere and other things. Feel free to keep those up. And we appreciate your listening. We'll talk to you next week.
Thank you, everybody. Click like, subscribe, leave us a review, tell your friends, tell your agents to listen in on us.
All right. Okay, bye.